South Africa has been rocked by yet another sobering financial reality. The country's budget deficit for January has officially landed at a staggering 54.66 billion rand, equivalent to approximately $2.84 billion. While this represents a slight improvement from the catastrophic 78.63 billion rand deficit recorded in the same month last year, the sheer size of the shortfall has triggered alarm bells across economic circles, raising urgent questions about the health of South Africa's public finances and the government's ability to steer the nation out of its deepening fiscal quagmire. For many South Africans, the term budget deficit might sound like economic jargon reserved for economists and politicians. But in reality, a budget deficit is a financial red flag that touches every citizen's life. Simply put, a budget deficit occurs when a government spends more money than it collects in revenue, primarily through taxes and other income streams. In South Africa's case, ballooning government expenditure, driven by a bloated public sector wage bill, relentless bailouts to struggling state-owned enterprises, and costly social programs, has far outpaced revenue collection in recent years. As a result, the country has been forced to borrow heavily to plug the gap, sinking deeper into a pit of debt that could haunt future generations. But why should ordinary South Africans care about these dizzying numbers? Because a swollen deficit has real and painful consequences. The more the government borrows, the more it must pay in interest on that debt. Money that could have been spent on essential services like healthcare, education, infrastructure, and job creation. Furthermore, international credit rating agencies closely watch deficits like hawks. If they decide South Africa is becoming too risky, they could downgrade the country's credit rating further, making borrowing even more expensive. This vicious cycle could push South Africa closer to a full-blown debt crisis, similar to what crippled countries like Argentina and Greece in the past. Looking ahead, South Africans should brace themselves for a bumpy economic ride in the coming months. The Treasury's latest data confirms what many feared. The government's spending habit is still out of control, and revenue collection is struggling to keep up amid sluggish economic growth, high unemployment, and persistent power cuts that continue to choke businesses. This combination of low revenue and high expenditure is a recipe for fiscal disaster. In practical terms, the budget deficit could mean higher taxes for ordinary citizens, reduced government spending on critical services, and a heightened risk of inflation if the government resorts to printing money to finance its debt. The deficit also carries ominous political implications, especially in the aftermath of a fiercely contested general election that left the country with a fragile coalition government for the first time in its democratic history. With voters already disillusioned by years of economic stagnation, corruption scandals, and failing public services, the new administration faces intense pressure to show immediate results, and the massive deficit is a glaring obstacle to delivering on campaign promises. Opposition parties, emboldened by the ANC's weakened grip on power, are seizing on the deficit as evidence of fiscal mismanagement and using it to demand greater transparency, spending cuts, and even austerity measures. Meanwhile, international investors and credit rating agencies are closely watching how the government handles the deficit, with any sign of reckless spending or populist policies likely to trigger capital flight and a further downgrade of South Africa's credit rating. This creates a political nightmare for the ruling coalition, which must strike an almost impossible balance between maintaining social spending to appease frustrated citizens and demonstrating fiscal discipline to reassure global markets. In short, the deficit has become a political weapon, an economic time bomb, and a credibility test all rolled into one, and how the government handles it could make or break its survival in the coming years. In conclusion, South Africa's 54.66 billion rand deficit in January is more than just a statistic. It is a stark warning shot fired across the bow of a nation already teetering on the edge of financial and political turmoil. Unless urgent and decisive action is taken to rein in spending, boost economic growth, and restore investor confidence, South Africa could soon find itself confronting a full-scale fiscal crisis with devastating consequences for every household. The deficit is not just the Treasury's headache, It is a national emergency, and every South African has a stake in how this story unfolds. Your perspective matters. What do you make of South Africa's budget deficit situation? Share your thoughts and insights in the comments section below. If you like this video, be sure to subscribe to the New Africa channel and turn on the notification bell so you don't miss any of our informative future videos. Stay informed, stay engaged, and thank you for watching.